I think if you're going to lean on the long side, calls are probably a better way to do it than purchasing the stock right here.
And look at the authority of this level. Basically, we have a huge risk that we undercut and we plunge the downside. Risk that we undercut and drop sharply. I think it's a dangerous bet to be long here.
In this video, as Tesla stock continues to swing about like an unrestrained meat club ahead of Q3 earnings, the short-sighted genius stock traders of CNBS explain how to bet on Tesla stock leading into earnings. And unbelievably, these stock astrologers believe Tesla stock is headed meaningfully lower and warn against being long Tesla stock. That's right, at around 52-week lows, despite near flawless execution over the last 12 months and an absurdly low valuation. The folks at CNBS are adamant you do not want to own Tesla stock, you do not want to buy Tesla stock, and you should probably be short Tesla stock leading into Q3 earnings. The collective brain damage is palpable. Now, if you guys could help me out for a moment, I'm just trying to count what number comes after 178. Oh, that's right, 179. There's 179 exclusive videos available on Patreon and counting, and I really am counting. Tomorrow, it's probably going to be 180 and so on. So if you're not already a member, you really are missing out. You can join with the card in the corner or the link in the pinned comment. And spoiler alert, today I posted a very super serious video. Very serious, I promise. My true thoughts, what I really think about Tesla's current valuation and Gordon Johnson. It's definitely the most serious video I've ever posted. So if you're not already a member, you know what to do. Another extremely quiet day for Tesla stock, up a mere 7%. The market cap still hovering around the $690 billion mark in late 2022. Just wanted to provide some context. Over the last 5 days, as I said in the intro, Tesla stock swinging about like you would not believe. Talk about volatile. The last 1 month, things look a little bit more smooth, rolling downhill like a Nikola 1 truck under its own propulsion. The last 6 months, down almost 35%. Year to date, down over 45%. Over the last 1 year, down nearly 25%. Clearly one of the most volatile stocks on the planet. In fact, I think the only thing more volatile than Tesla stock is your ex-girlfriend. I'm just kidding. I know you've never had a girlfriend. So let's hear what the short-sighted stock astrologers on CNBS have to say about Tesla stock leading into earnings.
Last week, one viewer just asked, just bought Tesla October 240 calls expecting a significant bump going into earnings. Do you agree? Mike, this week you're thinking about the same thing, but not quite in the same way.
Yeah, I mean, this is a difficult one, right? Because Tesla is clearly, I think, the leader in the EV space. We've seen that. It's one of my Holly Index names. My wife drives the car. She loves it. And I tend not to lean against the companies whose products she favors, because I think she's a better indicator than I am sometimes of what consumers' interests are. But the problem is...
So let me set this up. We've just heard from somebody pointing out Tesla's leadership, the fact that his wife loves the products, and that if his wife loves a product, it's generally not a great idea to be betting against this company. This seems to indicate that over the long term, Tesla is likely to maintain a compelling lead. Amazing products, they're already in a position of leadership. I mean, call me crazy, but were I a long-term investor, I'd probably own Tesla stock, which I do, plenty of it. Never sold a share, been accumulating for more than half a decade. The truth is, I'm just not smart enough to be trading around volatility in a name like Tesla. I see value over the long term, I buy and hold. It's pretty simple. I have a tiny brain, so I'm not smart enough to figure out when's a good time to be betting for and or against the stock. I'm no genius. What can I say? I have a funny feeling, however. We're about to hear justification as to why this should be completely disregarded. Tesla's leadership, their dominance, and their compelling products. So let's see what this expert has to say.
Consumers are under significant pressure right now. They're under pressure because we see inflation, so that is raising the costs of a lot of things that they need. And we also have rising interest rates. And what that's going to do, of course, is reduce the amount of discretionary income that they have, and it's going to increase the monthly payments, if they choose to finance, for the purchase of a new car, especially expensive cars like Teslas, which, by the way, have seen some price increases of their own, even ignoring the increase in the payments that is going to come from these rising interest rates. You add to all of that the fact that even with what I think are probably going to be optimistic numbers for full year 2023 at about 20 billion, is trading at over 30 times that number. That seems a little bit rich to me, particularly in this environment. So
short term, short term, short term. Notice the interest rate environments currently right now, blah, 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 blah. Also, the point being used that Tesla's had to increase prices, as if that's bearish. On what planet? The fact that Tesla's been able to massively increase prices on their vehicles and still sell every vehicle they produce is a stunningly bullish signal. speaks to their leadership and their pricing power. Now, the points are valid in terms of interest rates going up, meaning car payments will be higher. This is true. It also is true that many consumers in a tightening environment, recession and so on, are like, oh, maybe I won't buy that new car after all. This is also true, but this is to ignore all of the evidence that Tesla's demand is far in excess of their current supply. To completely forget about the fact that Tesla has a huge lever for pricing power. Tesla could slash the price of their vehicles by 10+% and still have industry-leading profit margins. This is a classic example of getting caught up in the noise. It's a turbulent time for the stock market. It's a turbulent time for the global economy. It's a turbulent time for companies producing complicated products at scale. But you have to look at Tesla, the company, Tesla's execution. So many people get stuck. They don't even get that far. Oh, the macro environment, interest rate, I'm scared. Oh, what? Am I supposed to sell growth stocks? Yeah, okay, I'll sell them. And they miss the opportunity. Tesla is near 52-week lows right now. I've said it 1 trillion times. In my opinion, it's literally the bargain of the fucking century. So the current macroeconomic environment seems to be clouding the judgment of many investors. And I use the term loosely and derogatorily because people who think they're investors but are actually traders are not investors. And there's nothing wrong with being a trader, especially if your goal is to lose catastrophic amounts of money. Or if you have a gigantic brain, much bigger than mine, and you can actually make money trading, in which case, more power to you. I'm not smart enough to do that. Hence, I just buy and hold.
I think if you're going to lean on the long side, calls are probably a better way to do it than purchasing the stock.
I just don't even believe it. He did just suggest that if you're bullish on Tesla, probably better to have options, call options. You know, the things that have the possibility of being completely worthless, like completely worthless, going to zero. If you're bullish on the company, it's better to take the chance of going to zero with potentially higher upside if it rips versus just owning the stock long and holding it with no possibility of your stock expiring worthless in 2 years. Options could actually work out pretty well right now. Tesla's dirt cheap. Options are pretty affordable as well, and the future looks bright, so don't get me wrong here. But I just have to emphasize the insane amount of additional risk that comes with call options. If your timing's off, you're fucked. Whereas if your timing isn't perfect on a buy and hold, who cares? Stocks don't expire worthless, except of course in cases of bankruptcy. Just so you guys know, the original source video, linked in description, is entitled, and I quote, "Strategies for betting on Tesla ahead of earnings." So clearly, betting, gambling, not investing. So I don't want to be too hard on these folks. After all, this is the same network that has a segment called Fast Money. I mean, does that not say everything you need to know?
Right here, not least of which, of course, is because there's some potential that Elon, if he's compelled to go through with his purchase, might actually have to sell some of it. But I'm inclined at this point, I think, actually to go the other way. If I had this stock, I would look to hedge it, and otherwise I might be leaning on the short side.
Right. Might even be short Tesla stock. Near 12-month lows, leading into earnings. He must be receiving mentoring from the Mark Spiegel School of Capital Destruction.
I was looking out to December, the 200 150 put spread. When I was looking at that earlier today, it was going to cost about $13.50. That's a way to risk just a portion of the stock price if you wanted to hedge a long equity exposure or take a bearish bet. But I do think that this is just a tough place to be in this environment, and it's going to remain that way, I think, for the foreseeable future.
This is a very telling comment. We heard it's going to be tough for the foreseeable future. Now, if the foreseeable future is the future that is seen by a short-term stocks gambler, a time perspective about equivalent in length to a micro penis, then this is fair. But I would conjecture, if you don't have a short-term gambler mindset, stock trading, the foreseeable future actually extends a lot further than the next few months, quarters, and maybe even years, in which case nothing that's happening today at all in the macroeconomic environment has anything to do with Tesla.
Yeah. Carter, what's your take on the chart?
I'm with Mike. It's a tough place to be. Let's look at the charts and see if that is the case. It very much is the case by my work. So what do we have here? We know this stock was as low as $12. Just a couple of years ago? It hits $4.15. There are no lines on here. Let's put some lines on.
Here comes the stocks astrology. This is a deadly combination. Hubris, a gambler/trader/stocks casino mindset, and painting yourself into a false sense of security by reading into the tea leaves of what a stock has done historically. Technical analysis, literal astrology for stocks. See, this is a dangerous combination. Technical analysis is a load of horse shit. People who don't know what the fuck they're doing, can't understand a company or the technology or anything like that, lull themselves into a false sense of security. Oh, if it's gone like this, then this is probably going to, I can't lose money because stocks astrology. And then people base their decisions on what the fuck has happened in the past. Ladies and gentlemen, the only reason a stock price changes at all is as the result of buying and selling activity of that very stock. The collective decision of many tens of thousands, maybe hundreds of thousands of investors buying and selling a security. That's what moves the stock price. What the stock did yesterday or 3 weeks ago or over the last 12 months has absolutely no bearing on what the stock does today or tomorrow or next week. Nothing at all. If you want to be a Poindexter, you can certainly argue the point. Maybe technical analysis can become a self-fulfilling prophecy. And I would suggest, while this is true on a very small scale, over the long term, it's completely meaningless and doesn't move the needle because there aren't that many morons in the market. There are some, but there's not that many. How can we know if this is a reasonable statement? Well, if technical analysis, aka astrology for stocks, was so effective, surely every single person who understands how to read a chart would be a multi-quadrillionaire. Because you look at the chart, or your crystal ball, or whatever you do, pray to the flying spaghetti monster, and then you can tell exactly what's going to happen in the future based on the previous state of the stocks chart, right? Right. Sorry, what's that? My editor's in my ear, guys. Apparently we have a clip to play. I'm not sure what's going on, but cue clip.
What is all this astrology business? Fundamentally, it's the contention that which constellations the planets are in at the moment of your birth profoundly influences your future.
So, kind of like technical analysis. Which position the chart was in the past determines the future of the chart, because that's how it works, right?
A few thousand years ago, the idea developed that the motions of the planets determine the fates of kings, dynasties, empires,
and stocks.
Astrologers studied the motions of the planets and asked themselves what had happened last time that, say, Venus was rising in the constellation of the Goat. Maybe something similar would happen this time as well. It was a subtle and risky business. Astrology developed into a strange discipline, a mixture of careful observations, mathematics, and record keeping, with fuzzy thinking and pious fraud.
First iteration. So that's the exact same chart, but what we know is, having responded to this trend line beautifully, we have now, of course, undercut. Put in the red arrow. So let's draw the lines. You see the head and shoulders top? Watch this next iteration. Same thing. And there it is. Meaning this has all the elements of a great winner. I mean, 12 to 415 that stalled and losing its way.
Nevertheless, astrology survived and flourished.
Put that red arrow in again. Let's go to the here and now, even up close and personal. So now there is the head and shoulders. And look at the authority of this level. Basically, we have a huge risk that we undercut and we plunge the downside.
Why? Because it seems to lend a cosmic significance to the routine of our daily lives.
Final chart, same time frame, just drawing the lines a different way. Not good. We are set up with risk that we undercut and drop sharply. I think it's a dangerous bet to be long here.
Astrology suggests a dangerous fatalism.
I think it's a dangerous bet to be long here.
I think it's a dangerous bet to be long here. Near 12-month lows. What the f*** is this guy thinking? I'm just kidding. He's not thinking, because technical analysis, all the answers are in the sky, or in this case, in the charts. And as Carl Sagan wisely pointed out, astrology, whether for stocks or otherwise, encourages a dangerous fatalism. This obviously means this, and therefore I don't need to think, because if the technical analysis, the stars say this, that's definitely true. I don't need to think about it, and therefore it must be dangerous to be long, because the chart told me.
Brian, you with the other two guys? A plunge lower?
I am. I mean, look at that chart. Looks terrible if I'm an investor in Tesla. I mean, it could seriously go to the downside. And
I just can't handle this. I just cannot handle this. We have to talk about the absurdity. That chart looks terrible. It could go lower. Like I said earlier, the thing that moves Tesla's stock price is the collective buying and selling activities of investors in the marketplace. Why is it that these clowns are talking about the chart, the double inverted scrotum pattern indicating that it could go lower, instead of talking about Tesla's execution, their gross automotive margins, their wait times, their price increases? I'm not sure if they're high, stupid, or both.
look at that chart. Looks terrible if I'm an investor in Tesla. I mean, it could seriously go to the downside. And
okay. Very intelligent man takes a young, attractive woman to shower with gifts and pay money and also have sex with. Should I put sugar daddy in my bio? Or does it come without saying because of the website? P.S. I am not a virgin. Okay. Oh, fuck. Sorry, guys. Oh, shit. Hey, excuse me, editor. Can we just make sure we cut that out because that'll be kind of embarrassing. Okay. Sorry, guys. I just have to interrupt for 1 second. I want to apologize for Stephen. He's very rude and obnoxious. I'll just explain, okay? The reason he's mad about technical analysis is because he's not very smart. He got rejected by Mensa and he's just taking it out on all of us smart people. So I'm just going to explain why technical analysis actually makes sense. Okay, so if you could just direct your attention to the screen. Everyone paying attention? Hello? Class? Hello? Okay, good, great. This is very important. Make sure you're looking at the screen now so you can learn why technical analysis makes sense, okay? So as we can see here in December 2021, we've got some shapes on a chart, okay? And then in September 2020, we also have some other shapes on a chart. And now we have circles around some shapes on a chart. So now, if we just retrace this line all the way from here back to here, and then we just finish off with this, as you can see, we just have one more addition to make, and then perfect. Technical analysis complete. Sorry guys, technical analysis is very thirsty work. Okay, so let me just check my manual now. I just have to, okay, what does it mean when you have a giant dick across your chart? Oh, okay, sorry guys, yeah, perfect. So, the next obvious step is that the right nut here, Tesla stock is obviously going to crash all the way down to here, around the bottom of the chair. This is called a chair leg drop off the left nut. Is that the left nut? Hang on, I'm disoriented. Okay, it doesn't matter, whatever. That nut there, that one there, okay? So, this is the level that Tesla stock is going to, obviously, okay? Just around here, and I drew a circle just so you know that's exactly where it is, because the more circles and arrows, the better, okay? Tesla stock is going to crash to this exact level right here, and the chart shows that very clearly. So obviously, you want to be short Tesla stock, because Tesla is just a car company, and technical analysis makes sense.